Hey, Chess, tell me about how you guys got into the mortgage fund business.
Well, you got to go back to 2007. That's when we started AP Capital. And my business partner today was my friend and business partner then, Brad Unraw. He was a mortgage broker. I'd come from a different industry altogether and had some frustrations with my personal investments and said, how can we get my invested money into real estate? And because he was a mortgage broker, he was familiar with this space, which is the private mortgage fund space. And next thing you know, we had a fund started, and my funds and our friends and family were some of the first investors in AP Capital.
Tell me a little bit about what you guys do as a business.
So, I always like to kind of back up a little bit and look at the total lending landscape here in Canada. If you're a Canadian and you either own your home or you're wishing to purchase a home, the first thought is that you go to a bank. And correct, banks are the lion's share of lending activity here in Canada. In fact, 75% of the mortgage activity in Canada is owned and held by the big Canadian banks. Next from that, you have the mortgage finance companies, sometimes they're called monolines, credit unions, trust companies. And then there's a percentage of the market, which is still a very big part of the market, that is in the alternative non-bank space. And so that's where we live and operate. We as AP Capital lend 1-year term mortgages to borrowers that are maybe just not quite a fit with the bank. Maybe they are very close, but they're just not quite a fit with the bank.
So, does that mean that these are high risk people that you're funding?
Well, risk is obviously measured through various means. Our underwriting teams look at risk entirely. And so you look at, how people earn income, how they have their net worth, and their credit rating, which is a measure of their past performance with other people's money, you might say. So I would not categorize a borrower in our world as being high risk, because we look for those borrowers that have shown good credit performance in the past, that have a means to make their mortgage payments. You look at the metrics of a fund like AP Capital, and I think one can gain comfort that the risk is been well managed by our decision making in who we choose to lend to.
What would you say your experience in the industry has taught you over the years?
I think what we've learned since 2007, so for 17 years now, is that you must see a lot of deal flow in order to make good decisions. So if you look at that 17-year period, like I said, we funded over 2,000 mortgages, but I often say it's not the 2,000 mortgages that we funded that have made us successful. It's probably the 7,000 to 8,000 that we rejected. So what we've learned over the years is you need to look at a lot of applications so that you can be selective and find those mortgages that you feel are the best fit for the mandate of the fund. And that is to protect our investor capital and ensure that we receive monthly payments, and to ensure that we receive payout at the maturity of that mortgage. So experience, of course, is so much of value in all businesses, but I would say especially of value experience in the lending business, which, as I said, we've been doing this for 17 years.
And what are some of the key strategies that you guys have developed over the years to help you improve your business?
One of the things I think we're most proud of is the team at AP Capital. We have we just have really, really good, strong people. The men and women that are making decisions here at AP Capital, we just admire deeply. So the staff that we work with here, and I would say as much so the outside partners. So one of the strategies that we employed early on was to just work with those parties in our world that's sourcing of mortgages through mortgage brokers, and finding mortgage brokers that we connect with and dealing with very specific brokers. So if you look at 2023, we funded over 300 mortgages through 85 different mortgage brokers, and we intimately get to know those mortgage brokers. So we're not collecting mortgage applications just randomly from the public or from just random mortgage brokers. We like to work with those where we develop the relationship. So I think it's two parts. I think it's the internal team, and I think it's the external parties that we work with that have made us successful.
Tell me a little bit about the mortgage portfolio, such as it first mortgages, second mortgages, whereabouts?
So we are very much focused on the Western Canadian marketplace. We really love the Lower Mainland of Greater Vancouver out to the Fraser Valley. Over 85% of our mortgages are here in British Columbia, and all of them are focused on urban markets. That's really where we like to be. We're very focused on first mortgages. Over 85% of our portfolio is secured in first position mortgages. So we do some second mortgages, but primarily we're looking at first position mortgages. We like residential properties. We use a term an awful lot around marketable residential properties. I think we all know those homes in a neighborhood that are highly marketable versus homes in a neighborhood that are very unique and only for maybe one possible buyer. So we like to we like to select mortgages that are secured by residential properties that are highly marketable.
Yes, tell me just generally the composition of the mortgages. Is it residential mortgages? Do you do development, commercial?
So we're a residential mortgage lender, and we like to lend against existing properties with a home or a residential dwelling on the property. So we would not consider ourselves a development lender or a construction lender.
Tell me about the loan to value of the mortgages.
So loan to value is a very important measure in our industry. What it does, it measures the value of a home and then the amount of loan or debt against that home. So obviously the less the loan amount against the value, the lower the risk or the better quality mortgage, you might say. So in our world, we like to be under 65% loan to value for the total portfolio. Today, and leading up to today, we've consistently maintained under 60% loan to value of the total portfolio of close to 400 mortgages. And that gives ample room to protect against a decrease in home values.
So how would people who are looking for the type of mortgaging that you provide, how would they find you guys?
So all mortgages at AP Capital are sourced through mortgage brokers. The mortgage broker industry in Canada is well established. Over 50% of mortgages originated in Canada come from independent mortgage brokers. So we've developed relationships in that mortgage broker world, and those mortgage brokers have been some of our strongest partners in helping us develop the business.
As a prospective investor, what would be the advantages of investing in your mortgage fund?
Obviously, I think our longevity of we launched in 2007. We've been operating for 17 years. What we're very proud of is the consistent, steady returns of the fund. We distribute our income monthly to our shareholders, and we've had over 169 consecutive months of distributions to shareholders. Our 10-year average return is close to 8%. In this more elevated rate environment, we're closer to 9%. And so we're very proud of consistency and stability in operating this business for well over a decade.
As an investor, can I get cash every month, or do my distributions get reinvested?
You have the selection as an investor as to whether you receive monthly cash distributions or whether you receive monthly dividends via shares, meaning your holdings can grow on a compounding basis monthly.
And are your investments RSP eligible, TFSA, open money?
Yes, we do accept all types of investments, open or cash investments, as well as all the registered funds. So those include RSPs, TFSAs, RIFs, TIFs, and LIRAs, and so on.
So tell me a little bit about the track record of your fund.
We started AP Capital in 2007, and we're very proud of the stable, consistent returns that we've delivered to shareholders since then. About 14 years ago, we implemented a monthly distribution policy where we distribute our income to our shareholders on the first of each month. And since then, we've had over 169 consecutive monthly distributions of cash or shares, depending on how they like to receive their return, since we started that program.
So investors can elect either cash or DRIP?
Correct. So they can elect for cash or shares, and they can change that if they wish, or have part of their return via cash monthly or part of their return via shares on a monthly basis.
And if somebody elects cash, how does that work?
So during the subscription process, when they work with their financial advisor, they complete the documents that include their banking details. So we make a distribution directly into their checking account on the first few days of every month.
And what would you think makes your investment attractive for investors?
Obviously, longevity and experience. Our team has been doing this for over 17 years. I think also the fact that, we've proven that we can perform through various business cycles, where we've gone through cycles where demand has been soft or demand has been very strong. We've dealt with interest rate variations. Obviously, during the pandemic, we saw ultra low interest rates. We're now into a more elevated rate environment today. And I think just the resilience of our ability to adjust and deal through various cycles has proven well.
Tell me a little bit about your returns over the last 3, 5, and 10 years.
So if you look at it over a 10-year period, our average annual rate of return is close to 8% net of all fees to our investors. In the more elevated rate environment of today, 2024, we're trending closer to 9%. So we are in a business where the interest rate environment has an influence on our return to shareholders.
So interest rates obviously have been going up over the last while. If interest rates were to come down, would that affect your return to investors?
I mean, naturally, our business is in the interest rate environment, but there's always a lag and a delay between rates moving up or rates moving down. We're issuing mortgages in a fixed rate manner. So there's some time that it takes when interest rates are rising or falling for that to translate into the yield impact by the fund.
Would you consider your investment an alternative to a bond type of investment?
There's an element of comparison there. Obviously, the stable, steady return, the unchanged share price over 17 years draws some correlation, you might say. And I think that becomes the appeal to many of the existing shareholders and investors in the fund. We have more than 1,400 shareholders today, and they love that consistent, stable, steady yield that has proven to be, larger than or greater than some of the fixed income options that they might have from their financial advisor today.
How are investors finding out about your fund?
So we work closely with financial advisors. And so we always encourage people to speak to their financial advisor in order to learn more about us, or visit mickinvesting.ca and you'll learn more. And through that website, you can be introduced to a financial advisor.
So as an investment opportunity, what sets you guys apart from the others in your industry?
I struggle sometimes with that question because we just love this business, and the people that come to meet us build trust in us, and they build confidence in our ability to continue to deliver. We're issuing mortgages. This is no magic business. We make good decisions every day. Our team is strong. We have confidence in our team. We have confidence in ourselves. We think our track record is impressive, but at the end of the day, an investor needs to meet us and be comfortable. And what we found over the years is as they spend time getting to know us and the team, that their confidence increases and they become more, loyal to AP Capital.
Why would an investor choose AP Capital?
I think once they come to meet us, they'll understand how others have answered that question. We have over 1,400 shareholders. They've come to meet us, they've come to know us, and they've come to trust us. And I think what comes with getting to know us is that we're passionate about what we do. We're knowledgeable, we have experience. The team is just a great group of people. And so I think we just want people to come to understand us as a team and what our approach to building AP Capital is, and come along for the ride.
How do you guys report to your shareholders?
So we provide monthly reporting to our shareholders, both in the form of statements that they can access online, as well as through a monthly update or newsletter, you might call it, that's sent to our investors as well every single month. We've taken a great deal of pride in transparency and thorough reporting to our shareholders. If they wish to contact us by phone or visit us at our office in Vancouver by email, we welcome all of those. Really, we want people to have an ongoing building trust in their relationship and in their decision to work with AP Capital.
As an investor, can I invest directly with you?
So investors must invest through a licensed financial advisor, meaning they're licensed with the Securities Commission in the province where they live. So if you're a British Columbian, you must work with a financial advisor that's licensed with the BC Securities Commission. Here on mickinvesting.ca, just hit the contact us and somebody from a licensed firm will be in contact with you.
Tell me what the future looks like for AP Capital.
So as we look at the future, we kind of look at the total landscape of the market that we operate within. And if you look at the Canadian residential real estate sector, it has over a century of being a very stable asset class. Homes in Canada have been an investment that Canadians have made through generations. So to be a lender against residential dwellings, we feel very confident over the next 5, 10, 50 years.
So tell me a little bit about the solutions that you're providing at AP Capital.
So I think about that question as we provide solutions to investors where they see stable, steady monthly income that over the last 17 years has been superior to fixed income options. And underneath that all, it's secured by residential real estate. So we provide these mortgages to borrowers that don't quite qualify with bank financing regulations. And so by providing those solutions to one set of Canadians, we then can provide these premium returns to the investor Canadian.
So tell me about AP's relationship with the banks.
So our relationship with the banks includes a large credit facility that we have with one of Canada's Big Five. And in that relationship, they also syndicate with 2 other of the Big Five. So 3 of Canada's Big Five banks work with us in terms of providing some leverage in the fund. What's really important for investors is that the oversight from those banks is very, very thorough. And it's another set of eyes. It's essentially an ongoing month-over-month audit of the activity of AP Capital.
Ches, tell me about regulation and due diligence. Who's doing that on you guys?
So it comes in various forms and from many different angles. So we're regulated as a lender by the BC FSA. So all of our activity is managed by a provincial regulator in that manner. We have the oversight from a banking relationship, and we work with 3 of Canada's Big Five banks in our banking relationship. I would also say that on every mortgage we fund, we ensure that there is an independent appraisal performed. That's a critical component of the underwriting process.
Tell me about foreclosures.
So naturally, as a lender, there's some borrowers that fall into a category of delinquency and eventually needing to be foreclosed upon. So whether you're a big bank, a credit union, or an alternative non-bank lender like AP Capital, we do face mortgage borrowers that end up in foreclosure. So oftentimes investors fear that a foreclosure means losing money. In our experience, after 17 years, foreclosure simply means we have to work through the courts, and we work with some of the largest law firms to help us recover.
In all the years that you guys have been in business, has any investor ever lost capital with you?
In 17 years, we have not lost any shareholder capital. We've had consistent, steady returns. Yes, there are times where the fund might have one mortgage that has a loss, but because it's a pooled fund and that risk is spread across hundreds of mortgages, it has resulted in no losses for any shareholder in 17 years.
Ches, has any investor in the time that you guys have been in business ever lost any capital?
So the quick answer is no, but I need to explain why and how. AP Capital is a pooled fund. So investors come into a pooled fund and immediately are a part of hundreds of mortgages. So while we might experience a small loss on one mortgage, it has never impacted the return or any losses to any shareholder over 17 years.
Ches, tell me a bit about the liquidity of your fund.
So I think about liquidity on sort of two fronts. The liquidity of the mortgage portfolio, which then naturally equates to the liquidity for an investor. So when we talk about the liquidity of the fund, the nature of the fund, again, is that it's a pooled fund and it holds hundreds of mortgages. Now, we offer 1-year term mortgages. So every month we're receiving monthly payments from those hundreds of mortgages. We're also receiving payouts as mortgages mature. So the nature of the fund, by its definition, is that it's very liquid. The capital is being returned to us in the form of monthly payments, as well as in the form of payouts at the end of term. So for investors, when we talk about liquidity for investors, it provides them the opportunity, if they need to redeem or wish to redeem, to give us notice and for us to react in a very rapid manner.